Good morning, everybody. This is John Seville from Acorn Wealth. This is your executive summary prior to Monday's open, and it's going to be a very, very exciting week. Of course, we talked about the open range that was coming for the market. We've talked about the upward channel within the bearish flag that's being formed, and what we can see here is that on Friday, for open range, we broke beneath that. Now, it's going to be interesting to see what happens today, because ideally we could have kind of a possible rebounce candle where we challenge the high of Friday. But what would be really meaningful for everyone on the short side of this market is obviously as soon as possible a close below that, which means bearish until the 1st of next month. Now, the other thing that was meaningful that we saw in the market on Friday is not only did we set a bearish market open, or open range, I should say, but we also crossed back into negative territory on the Twigs money flow. So what that plays into is this anticipation that really what we saw was a short squeeze with all of the good news already baked into the Fed announcement, which we've been talking about all week. Those of you who are just watching this for the first time, this is what we had kind of been hoping would happen and predicting would happen, and if this market continues down, it's exactly what we want to happen to make us all a lot of money. So, obviously the focus will be on how the open range gets broken to the upside or downside or consolidates, and this first few days this week are going to be very important. We've got a lot of great positions on the go at the moment. Obviously we talked about INCY last week on our update on Thursday. That has done extremely well. That just continues to drop. That is a beautiful, beautiful setup. We also talked about STX. Both of these optionable plays that we discussed. If you didn't see it, you can always check out our other video on acornwealthcorp.com/YouTube. Published that on Thursday night. This, of course, was another one that jumped down 4.42%. I don't have time to discuss all the positions we're currently in or following at the moment because there's a lot, but it's been pretty much profit around the table, and that's exciting to see. So tonight I'm going to focus, or this morning in the US, it's tonight for me, it's 10:18 here in Australia, but I'm thinking in US terms, it's going to be this morning for you. One of the ones you can look at is a CRE, and this is kind of broken down from consolidation mode. You can see that it's just dropped down out of that consolidation. So a possible rally up into the 9-day at $26 would be a possible shorting opportunity. And I'd be looking for that to rally down to at least 24, but possibly down towards the 21 area. Looking back in terms of its long-term chart, you can see that there's in fact a long-term upward trend line that's been broken. And so while it's already at close to its lows, there is some short-term trading opportunity there on CRE. The other one that's now, keep in mind that I am about 90% of my portfolio is in shorts. I am weighting my scanning towards looking for longs to hedge against those shorts. Doesn't mean that I'm bullish on the market, but this is the second of two shorts versus a few longs that I found on EXPR is interesting. So this one's kind of started to break down. If this can break the low of that candle, we should probably fill the gap from 18.50 down to around 17 bucks. Just where the 200-day moving average catches it. So looking at about a good $1.50 run there, or around 8%. And in both these trades, I'll be setting my stop losses above the respective moving averages, holding them down. So looking at above the 9-day moving average. So that's at 19.19 currently. So you just have to gauge where that is as it drops through, if it drops through that support level. Now on the long side, I've got a list of 1, 2, 3, 4, 5, 6, 7, 8, 9 interesting longs. Some of the ones that didn't make the top 3, just to give you an idea, things like Arden, Elizabeth Arden, is just rounding out. I didn't like this as much because there's a possible head and shoulders formation there. That's what kind of steered me away. But you can see very bullish money flow divergence. So Arden caught my eye. AMC caught my eye. This was also had this kind of bullish breakout from a falling wedge. money flow breaking above. So I mean, all of these were interesting, but I had to narrow it down, and so the ones that I had to keep coming back to are these biotechs, simply because they seem to have their own personality. Now OPK has some significant insider buying, and if we can break the high of yesterday's candle, yesterday being Friday, the high was 1070 here. So if we can kind of break above this and find support right around that kind of 1073 area, that would be the area that I'm interested in. So that's what I'm looking for. The money flow is starting to show that. And in terms of a trading strategy around that, I'd be looking for a stop loss just below 1027, and I'd be looking at a target of around this shelf at around 1250. Okay, the other one, OVAS, similar story. Now these might be lower price stocks, but this one's trading 1.8 million shares. Over Science, very bullish money flow divergence, and for this one, again, same kind of strategy. I'd be looking for a purchase around 1797 so a pullback to that area, or even 1803, just to clear that even dollar number, which is a psychological barrier for a lot of traders, and even as high as what's the so up to 1830, so somewhere in that range, and I'd be looking for a rally up to this area where we're going to hit the moving average, as well as challenge the low over here. So I'll be looking at 22.33 basically. So we're looking for about a $4 pop, which is well over 20%. So if we can achieve that, this would be a home run, and that's looking good. So there's OVAS, and the most speculative probably of the three is this big gap down, very speculative, very low volume, but insider buying, and this one's kind of just curling over, looking like it wants to make a run as well. So anything around that $4 mark looks like it could have a run up to at least the overhead resistance here, which is at $5. That gives you a 20% opportunity to say $4.83. And let's have a look at the high of this candle. The high here is 485. So yeah, 483 would be what I'd be looking for. So I mean, all that's pretty exciting because we want to offset. We're taking basically heavy positions on the puts in positions such as what we discussed earlier, and taking speculative longs on the pharmaceuticals, and that's our strategy for now. So far, it's reaped great rewards, and if you haven't been a part of it, you've been missing out big time. So we are hosting for one last time. I know we said we wouldn't do it again, but we've had requests. We're going to be doing an encore performance of the Capturing the Crash webinar this Tuesday night. Do not miss it. It is my, I think it's probably going to be the cornerstone of Acorn's progress over the last 7 years. We called this crash in July, and now that the market's rallied up ahead of the Fed meeting, we're getting another opportunity to position ourselves into selectively high-quality option positions and stock positions, shorting low-quality companies, ones that are going to really potentially get slammed, because we think there's another 100-point drop on the SPY at least coming. And if you're well positioned, it's an opportunity to make 300 to 1,000% potential returns if you're positioned correctly. So Tuesday night, we're going to tell you all the reasons why, and we're going to tell you how to start taking advantage of it. And for most of the people who've been there before, they've shared with us that it's been one of the most exciting webinars or valuable hours they've spent. We hope you'll join us as well. Tuesday night, 5:30 p.m. To register, simply go to acornwealthcorp.com/event. Again, acornwealthcorp.com/event. If you haven't already showed up for one of our events, this one will be a big one. So we'll see you all there. And for that, happy trading. Take care.